Aware into the early afternoon on Wall Street, and the tone is turning a bit more constructive as the macro backdrop calms down, and a few growth themes take the spotlight. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. Since the last hour, the big new driver is coming from the bond market. According to fresh reporting from MarketWatch, a closely watched gauge of bond market volatility has dropped to levels that many pros rate as an all-clear signal for equities. When rates stop whipping around, it tends to lower the risk premium on stocks and can invite more risk-on positioning, particularly in growth and tech. That's helping underpin the indices as we move closer to the final stretch of the session. At the same time, there's an important macro question mark on the tape. Another MarketWatch piece notes that US GDP still looks surprisingly strong despite a year of punishing tariffs, sticky inflation, and rising unemployment. The story is that growth might still be running above trend, which sounds good, but traders are asking, can it last without forcing the Fed into staying tighter for longer? That's why this GDP resilience is actually showing up in some desks as a medium-term risk, great now, but possibly complicating the rate path later. On the opportunity side, a few sectors are clearly in focus. Sports betting remains a hot theme. MarketWatch is highlighting how younger, crypto-savvy traders are also some of the best customers for platforms like FanDuel and DraftKings. That crossover between digital assets and high-frequency gambling underlines why these names can see outsized engagement and revenue growth, but it also reminds investors to watch for regulatory scrutiny if problem gambling concerns grow. For now, the narrative supports continued interest in the online betting ecosystem. Tech and AI are in the spotlight again as well. Alphabet just announced a roughly $4 billion worth $75 billion deal to buy its data center power partner Intersect. As MarketWatch reports, this is all about securing reliable energy for AI workloads. Power has become the bottleneck for training and running large models. Traders will be watching how this deal feeds into the broader AI infrastructure trade. Data centers, grid operators, and specialized energy assets that can keep up with hyperscale demand. Space is another pocket of strength. Shares of AST SpaceMobile, a rival to Starlink, are surging again after President Trump signed an executive order aimed at ensuring American space superiority, according to MarketWatch. That's lit a fire under an already red-hot group of space and satellite names. It's classic policy meets speculation. Traders see potential for more government contracts and favorable regulatory treatment, but they'll also be quick to reassess if the hype outruns the fundamentals. Defense remains a quiet winner underneath the surface. Huntington Ingalls is still trading near record levels after winning that new Navy frigate contract. Building on last week's rally, the market is effectively rewarding multi-year visibility in defense spending, especially with the geopolitical backdrop still tense. In the slow burn but important category, there are a couple of under-the-radar stories worth keeping on the watch list. 1. A MarketWatch piece on who taps Social Security while they're still working, and why, speaks to longer-term retirement and income behavior. That can matter for financials, annuities, and retirement planning businesses over time. 2. With year-end approaching, another article is walking through tax moves that can meaningfully shift what people owe or get back. That kind of guidance doesn't move a single stock today, but it can influence retail flows, IRA contributions, and tax loss selling patterns into December 31. So, into the next hour, I'll be watching whether that drop in bond volatility continues to support a grind higher in equity indices, how AI infrastructure and space names trade as more investors digest the Alphabet and AST SpaceMobile headlines, and whether the strong but risky GDP narrative starts to creep more visibly into rate, expectations, and financials. And of course, we'll be back at the closing bell to wrap up how all of this plays out by the end of the session. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.